While there are always exceptions, the smartest way to build wealth is still the early path. Making millions doesn't have to take a lifetime of hard work. Sure, becoming a millionaire in your 50s is fine, but reaching that milestone while you're still young is even better. The journey to knowing the real truth behind building wealth from scratch is something many go through, and it's often marked by moments that reveal how anyone can do it. From the moment someone steps into school, the system starts trying to control their ambitions. But if someone allows the system to crush their dreams, they'll never create wealth from nothing. This isn't about some feel-good motivational nonsense. If a person can't even believe that something is possible, how can they expect to put in the work to become wealthy? Most people fall into the trap of being realistic, joining the crowd, and then discouraging the next generation from following their dreams. But it's possible to break that cycle. To make this happen, the first step is being careful about who you listen to. It's not just about ignoring fake gurus on social media, it's about avoiding those in your life who offer unsolicited advice. Friends and family may mean well, but if they haven't built wealth themselves, why listen to them about how to make money? Those around you often share advice based on what they believe to be safe or realistic. Maybe they tell you to focus on a stable job and save a little every month. Classic, conservative advice that they think will work for everyone. But the problem with this mindset is that it can prevent you from taking the risks or making the smart moves that actually lead to growth. Following their advice might keep you in a comfort zone, but it might not open doors to real financial freedom. Instead, consider who you want to listen to. Seek out advice from people who have already achieved what you're aiming for. Look for mentors, successful entrepreneurs, or even authors who have proven strategies. The key is to get advice from people who know what it takes to build wealth because they've done it themselves. Think of it like asking for driving lessons. You wouldn't want to learn from someone who's never been behind the wheel, right? Similarly, if someone hasn't walked the path of financial success, their advice might be limiting, even if it's well-intended. Taking control of the advice you choose to accept is one of the first and most important steps in shaping a mindset that's ready for growth. Only by filtering out the noise can you make room for the strategies that actually lead to lasting success. Next, when facing problems, it's important to think in different ways. Most people will run into an obstacle they've been told they can't overcome and give up at the first sign of trouble. The more someone lets challenges defeat them, the harder it becomes to break out of the herd mentality. They'll start believing they're not good enough. When faced with a problem, the approach is to think of at least 10 different solutions and choose the best one. If that doesn't work, try another until success is achieved. Thirdly, stepping outside the comfort zone is one of the most important moves someone can make. Growth and success rarely happen in familiar, easy settings. When someone stays within the comfort zone, they stick to what they already know and avoid things that feel unfamiliar or difficult. While this feels safe, it also keeps them from learning new skills or taking on challenges that could help them grow. The comfort zone might feel nice, but it also makes it easy to get stuck, missing out on the experiences that could shape a stronger, more resilient character. Putting oneself in tough situations is one of the best ways to improve. Take on something challenging, and even if it's uncomfortable at first, it builds confidence over time. Maybe it's taking on a new project at work, learning a skill you know nothing about, or meeting new people in an unfamiliar setting. Each of these pushes someone beyond what they're used to, forcing them to adapt and learn. Stepping out doesn't mean recklessly jumping into every difficult situation, but it does mean finding ways to stretch those boundaries a bit every day. Each small step, each slight discomfort adds up. People begin to realize they can handle more than they thought, and they start to welcome the growth that comes with each new challenge. And eventually, they'll look back and see that each time they ventured out of that comfortable, familiar place, they move closer to their bigger goals and dreams. So, the comfort zone may feel safe, but the magic happens beyond it. Also, when you're young with fewer responsibilities, it's easier to take risks to boost your income. That doesn't mean putting all your money into risky investments like crypto, but taking calculated risks is key. For some, the path to increasing income might mean starting a business, but it's not the only way. For others, starting a side hustle or changing jobs every couple of years can do the trick. Studies show that job hopping can help build wealth faster than sticking with one company. But if the goal is to build wealth quickly, picking the right career is essential. Choose one that focuses on results, not just the number of hours worked. Which brings us to investing early. One of the most important things to understand is that the earlier someone starts investing, the better their chances of building real wealth over time. Waiting too long makes it much harder to reach big financial goals. Studies back this up, like one from Fidelity, that shows how much people lose out on when they don't start early. For example, missing just 5 of the best trading days in the past 40 years could have slashed potential long-term gains by 38%. Missing 10 of those key days? Even worse, the potential gains could drop by 55%. It's a reminder that in the world of investing, timing can be everything, and getting started sooner rather than later is usually the smarter move. The best approach is to make investing a regular habit, sticking with it for the long term. But that doesn't mean diving in without a plan. Rushing into investments without knowing what's being bought is a mistake. So never invest in something you don't fully understand. And even if you're confident in an investment, never put everything into one place. Diversifying investments is crucial. It spreads out the risk. For example, a stock market investment strategy like the 3-fund portfolio can help. This strategy includes 3 main components: a U.S. stock market index fund, an international stock market index fund, and a bond market fund. This way, the risk is spread out while still having the potential for long-term growth. Aside from the stock market, diversifying into other assets like real estate, classic cars, and high-end watches is another way to reduce risk. This broader approach can increase the chances of good returns while protecting against potential losses. The same approach should apply to making money. Multiple income sources, such as physical shops, a distribution business, affiliate income, advertising revenue, stock dividends, and rental income, can offer protection if one source fails. When building wealth, constantly think about how to create different streams of income. This way, one mistake won't wipe everything out. Building wealth doesn't require a complicated blueprint. It starts with a few smart moves, consistent action, and the right mindset. By listening to the right people, stepping outside the comfort zone, taking calculated risks, investing early, and creating multiple streams of income, anyone can pave their way toward financial freedom. The process may feel slow initially, but every little effort compounds over time, inching you closer to true financial security and independence.